Caleb, I'll start with you. What we saw here with Constellation, right to the downside, that canopy growth, that part of it is a tough part of it, but did top on the numbers, but the stock's to the downside.
Right.
Your thoughts?
Canopy's got a pot. Constellation's got a pot problem, right? They made a big investment in Canopy growth. I think they have warrants to buy as much as 50% of it. They raised their stake last year, and cannabis stocks have been having a rough time right now. Some of that is because of the uncertainty around the legal framework, what's going to happen with the Safe Banking Act, and some of it's going to be, and some of it's related to the fact that there's so much uncertainty that people don't know what Constellation is going to be able to make out of it. That said, it's killing it in beer. The Mexican beers, Modelo and Corona, are doing very well.
Yeah.
But the drag is in wine and the drag is in pot.
Yeah, absolutely. So the beer part is the good part, no doubt. They've seen that growth. Pepsi, the revenue was climbing, the profit dropped a little bit. They're facing some higher expenses. Paul, did you have a thought on Constellation before we get to Pepsi?
I do agree that clearly the investment in Canopy has gone bad. The pot stocks have been decimated, and maybe they bounce, but there's so much confusion and murkiness around the pot stocks. Although I guess if you wanted to take that and turn it into a positive, you could say, well, they're already down so much. I guess there's not much left between now and zero, maybe. Constellation, what I didn't like was they kind of sort of guided higher, but it's because they're going to sell 30 brands to Gallo and have the deal close, I think, in this quarter. And that seemed a little curious to me that they'd close a deal later and it maybe juice forward earnings a little bit. Listen, the stock's always been expensive. It's finally back into a relatively cheap range. I think, maybe 180-ish on the downside. I think the stock in a good tape, in a good market where we don't have anything more than mild weakness in the economy, could see 250. So in a weakness, I think it's a buy.
Caleb, your thoughts? We were just talking about a multitude of things from cannabis to the Pepsi numbers. Pepsi did well. Coca-Cola is actually up as well. It's the #1 performer in the Dow Jones Industrial Average. Is this where it's at right now?
Well, Pepsi's doing well because it's got a great snack business. A lot of people think Pepsi is a drink business, of course, with the Gatorade and Pepsi Classic and all of its offshoots. But its snack business is strong. Doritos, the Frito-Lay aspect of it is doing very well. For Pepsi. And Pepsi's great at marketing. They're spending a lot of money in marketing, and they're getting the return on the investment there. And they're coming up to some big events. Obviously, the baseball playoffs, football season's in full effect. This is Pepsi's time. It's doing well in North America on the soft drink side, but you really got to look at snacks because that's a bigger and bigger part of its business. Plus, it owns 50% of a big hummus company, and that's starting to do well too. But it really can't go wrong when you look at some of the things that it sells well. It's Gatorade Zero. Out of nowhere is a $500 million brand all of a sudden. So they're doing okay, and it looks like they're keeping their guidance for the rest of the year, which is good.
Right, that is good news. What about names, Caleb, such as McDonald's and also Starbucks? Solid underlying fundamentals for McDonald's, expanding sales for Starbucks. They're just both winners. It doesn't stop.
Right. McDonald's has come off a little bit in the last few weeks, but there was a period of time earlier in the year when it was making new highs, new all-time highs all the time. And it was hitting on all cylinders. Same-store sales were growing. So it seemed to be doing okay. It missed out on the chicken sandwich wars this summer, which was a bummer. But it is trying to get into the coffee wars big time. I think today they launched some sort of a cinnamon latte. What are they calling it? A McCafe cinnamon cookie latte to compete with the pumpkin spices of the world. We'll see how it goes. It has been slipping, but it was one of the stronger stocks of 2019 earlier this year.
Right, and I think all of these companies have really expanded into digital, into delivery, into kiosks, get mobile orders. Paul, your thoughts?
Yeah, just getting back to kind of the Pepsi-Coke fight, if you will. People don't realize Coke manufactures syrup and delivers it to bottlers. That's the crux of Coke's business. Whereas we discussed a minute ago, Pepsi is so well diversified in the snack area. People use them as a pair trade a lot, but Coke is very, very singularly focused. Pepsi is so diversified between Quaker and you're talking about Gatorade and Gatorade Zero, how big the brands become and the snacks. The hummus this quarter, the Sabra business didn't have a great quarter, I do think that's a little blip in the road, a lot more competition coming into that space, but investors really truly don't understand how different Coke and Pepsi have become. Regarding McDonald's, their trends have softened a little bit. It's had a huge run, and it was every day it was making new high, new high, new high. It's got a great long-term story, but I think McDonald's probably has either some sideways action and then resumed its uptrend, or it could pull back to 190-ish before launching another assault.
Right. Caleb, what are you hearing? Are people mostly optimistic on some of these consumer type stocks still?
Well, you said the right word. These are consumer stocks. They ebb and flow with the strength of the consumer. The consumer's been the strongest leg, certainly of the U.S. economy for the last year, probably the last 2 years. So these stocks ebb and flow with that. McDonald's is a little bit of an outlier there. McDonald's does well when the economy goes into rough patches because it is a low-cost alternative. So it could benefit from that. That said, Starbucks, you would think, would suffer a little bit. Who's got money for a $6 latte? But Starbucks is growing sales in the U.S. and growing sales in China. Name another brand that's doing that right now. It's very hard to find that, so it seems to be hitting on all cylinders. But they are tied to the consumer, and as the consumer tightens up, we'll see which one of these stocks is the most resilient going forward.
Yeah, it's Starbucks. It's a pretty amazing, Paul, when we talk about, Caleb makes such a great point about the growth that they've seen in China, sales, services, everything. Starbucks is doing so well. There was so much worry about Luckin coming in with a cheaper product and overtaking Starbucks, and we have not seen that come to fruition at all. In fact, Starbucks remains the greatest there.
Well, so first, there is a lot of brand loyalty with Starbucks because you have to be that way in order to spend that kind of money for a cup of coffee. I'll take the opposite side of Starbucks. I think it's a screaming short. I think they've got a big problem in China. I think China's economy is weakening. Without a trade deal, a real trade deal, not some 6 to 12 month, let's kick the can down the road. But without a real trade deal, I think Starbucks has an awful lot of air beneath it, and I think it could fall significantly in the next 6 to 12 months. Long term, of course, it remains a great story. You can't put a price on the brand, but I think there's all kinds of headwinds in front of us in the international business.
All right, Caleb, last 10-second quick thought.
Quick thought, it's all about the consumer. We're going to get the jobs report tomorrow. Yeah. That's really a big part of what's happening with consumer confidence right now. If we see a weak report, we'll see a lot of consumer stocks suffer because people are going to feel like it's getting wobbly underneath the consumer, which is holding up the economy.
Yeah, great point.
But don't forget, these stocks are still defensive in nature. So in a bad tape, a bad economy, these typically will fall less than some of the higher beta companies.